It's still very early days. I mean, a growth rate of 0.3% in one quarter is pretty weak. You've got to remember trend is about 0.6, so let's not get carried away here. But in terms of the revision, the ONS currently put a lot of weight on the output side of the accounts, things like the service sector, industrial production, and what's happening there. We already saw some better numbers on production, and without seeing the detail of today's release, it's possible that there may be slightly better news on the service sector as well.
Well, then I guess the next question is talking about, of course, you say it's only early days, we're going to get another revised number, but if we look at the first 3 months of this year, the first quarter, a lot been going on, of course. VAT back up, stamp duty back up, the car scrappage scheme ending the end of next month. That doesn't bode, I guess, well for the first quarter. What do you think?
Well, I think you're spot on there. The government has introduced a range of measures to try and help people bring forward spending, if you like. But the problem is that doesn't create brand new demand. It's a bit like Doctor Who, where you bring it forward from the future instead. So the risk is, as those incentives end, people may be pulling their horns a bit more. And we know from the other data released during this week that the rest of the economy, the investment side, the trade side, really isn't ready to pick up the baton of growth just yet.
Is that the main lagger? I mean, is that what we should really be focusing on going forward, the key concerns, if you will?
Well, it's certainly something that the Bank of England, for example, has been talking about for a long time, this rebalancing of the economy away from consumption and towards investment and exports instead. I have to say here at Daiwa, we're a little bit suspicious about that logic. It's hard to see much impact of sterling on export volumes so far, and investment's still very weak. Instead, what you might see is consumption gradually recover during this year, because people maybe now are a bit more happy with their saving. The really important thing here, though, is that you can only spend more money if you're earning more money. And earnings growth in the private sector in particular is very weak. It's hard to see where strong growth is coming from.
Okay. Talking of, well, not strong growth, I guess. Let's talk about, I want to ask you just a quick question about the sterling. Of course, that's been under a lot of pressure recently. We saw a dip yesterday off the back of those investment numbers. Going forward, because there are some out there who are saying the sterling is a bit of a basket case, in fact, and very vulnerable, perhaps more vulnerable than the euro. But would this add a bit of positive sentiment, these figures today?
Well, you may see some bounce on the back of today's numbers, because they were better than expected. Things weren't as bad at the end of last year as some people feared. But I think you've got to put sterling in context. If you look at its performance over the last year or 18 months or so, it's actually been broadly steady, certainly compared with the sharp fall in sterling that we saw before the recession. So let's not get too carried away by small movements on financial markets.